report, the 4th of October. So what's up for us this week? Now, today I want to talk about Bitcoin's fourth quarter outlook, ETF demand, geopolitical risks, and tax policy uncertainty. Everything that can affect the price of Bitcoin. Now, Bitcoin has historically performed well in October, especially during the bull cycles in halving years like 2024. This year is an halving year. So this positive seasonality often extends throughout the fourth quarter. Now, analysts from CryptoQuant suggest that institutional demand via US-based Bitcoin exchange-traded funds is crucial for continued price growth. They highlight a significant shift in ETF activity from a net sell-off of 5,000 Bitcoins to a net purchase of 7,000 Bitcoins between September 2nd and September 30th. Okay. So if this demand for ETF continues to escalate, it could further boost prices in the last quarter of 2024. Now, according to data from CoinGlass, 86% of traders were bullish entering October. However, this momentum weakened after recent Middle East tensions between Iran and Israel. Following Iran's missile attack, Bitcoin prices plunged nearly 4,000 US dollars. Now, on October, the first US-based Bitcoin ETF saw approximately 243 million US dollars in outflows, with BlackRock iShares Bitcoin Trust being the sole exception, recording positive inflows of 40.8 million for the 15th consecutive day. So, given the potential for Gaza conflict to escalate, risk assets like Bitcoin may continue to face pressure in the coming weeks, particularly as Israel has vowed retaliation. Polymarket, a decentralized prediction platform, forecasts a 38% chance of an Israeli response to Iran's attack by Friday. That means today. No, there's a 38% chance Israel may attack Iran, and this chances increases as we go. Okay. Now, without a catalyst to support cryptocurrencies, Bitcoin might experience further consolidation until the US presidential election. Now, I'm talking from the base of a larger time frame, and I say experience further consolidation. It's not a short-term thing. Okay. Now, another part I want to discuss is this. Another critical development is the emergence of a controversial tax proposal. Kamala Harris, a possible candidate for the next US president, has endorsed a 25% tax on unsold assets. And this could actually affect Bitcoin in the longer run. Okay. This unrealized capital gains tax would require individuals to pay taxes on the appreciation of their cryptocurrency holdings even if no sale has been made. Okay, you heard me right. The individuals have to pay taxes on appreciation of their cryptocurrency holdings. Even no sale has been made. That means you're in profit, you have to pay tax. While the proposal targets individuals with at least 100 million in wealth who do not pay a minimum of 25% of their income, its effects could ripple through the entire market. Because this is just not talking about crypto, it's the entire market in general. Okay, so why am I bringing this up? Because large investors, or in the crypto world we call it the whales, might sell off assets to fund these tax payments, driving down cryptocurrency prices and negatively impacting all investors, including those with smaller stakes, right? So the tax liabilities could be enormous due to Bitcoin's exceptional performance in the past decade, with a 700% increase over the last 5 years and a staggering 17,000% over the past 10 years. Now, this would result in billions in taxes for long-term Bitcoin hodlers. Okay? The tax plan also poses broader economic risks, potentially stifling innovation and financial prosperity. wealthy Americans could be forced to sell large amounts of their stock holdings to cover their tax bills, while startup founders, often compensated in equity, might be discouraged from taking their companies public. Now, enacting this policy would represent a significant philosophical shift in US tax laws. However, the Democrats would need a decisive victory in the upcoming November election to push this rule forward, likely in negotiations tied to the expirations of the 2017 tax cuts. So while this is not something that's going to be easy, but it does pose a risk once Kamala Harris comes into office. Okay, because they may say that this thing only affects the wealthy, but you don't see there will be ripple effects right down to right down there, to the lowest, even the poorest, those that even just started. And you can see that could be the catalyst of a market correction, where all this for the cryptocurrency, the whales are like, once this thing comes into effect, then huge sell-off can happen. A lot of things can happen. So we have to be very, very careful, take steps one at a time. So it's not like immediately Kamala Harris becomes the president, of the United States, this thing will happen. This thing will take time because it has to go through and the bill has to be passed. But first of all, let's just monitor whether the Democrats would have a decisive victory, because within the Democrats also, there are a lot of those the within the Democratic Party who may not support this. Okay, so we will see how this progresses. So with that, that's a report for today.